Hi everyone, Juliet here, ready to soothe your soul with some sweet crypto talk. Many of you have been in the game for years, scrupulously stacking your sats. You've dabbled in the altcoins, possibly went all in on a losing proposition, or perhaps after careful study, luckily timed a large one-time buy, hitting that ever so illustrious jackpot. Which if that's you, congrats on winning big. You know we're all secretly a little bit jealous. There are so many strategies to grow your stack of crypto, it can be quite daunting at times. From the Fibonacci sequence used in technical analysis, to the in-depth white papers the dev teams of the hottest new projects pump out. Trying to stay on the bleeding edge of this groundbreaking technology is quite a chore. After a while, it can get to be a little too much for some of us to handle. All of that information overload day in and day out. Laundry, crypto, dishes, laundry. Woo! It's a lot, and sometimes all of this information can turn us crazy. We have thoughts like, well, if I buy now, it can go down. And if it goes down, do I sell it and then take out a loan to buy more? Or can I sell my house, my car, my chairs, and FOMO all in right now because it's going up forever? You get the picture. If we aren't careful, we find ourselves overthinking it. We can get so lost in the predictions and the strategies that we forget that action must be taken. We've become paralyzed with our inner turmoil. Paralysis through analysis, so the saying goes. Luckily, there is something that will allow us to cope with some of this psychological anguish. And that something is called dollar cost averaging. DCA for short. This technique isn't necessarily glitzy and glamorous, but stick with me here, because dollar cost averaging is perhaps the most efficient way to build wealth. Instead of making a large, risky purchase and trying to time this wildly volatile crypto market, dollar cost averaging involves making regular, usually smaller, purchases of an asset over time regardless of the price. Let me repeat, regardless of the price. For example, if you have $1,200 that you want to convert into cryptocurrency, you could use the dollar cost averaging technique and break up that stack of cash into smaller chunks to invest into the market. You could buy $100 of crypto every month for the next year, or $50 of crypto every month for the next 2 years. The consistency of your purchase is key here. It's important that you invest the same amount of money into the market at regular intervals, and you make the investment no matter what the price is. Do it even if crypto just crashed 20%. Perhaps the biggest benefit to dollar cost averaging is that it removes our emotions from investing. Many people talk about investing a large amount of money into Bitcoin and hodling it for several years, as they believe it will continue to go up in value. But will they? A lot of us won't have the courage to invest when the price is dropping. Some of us will get caught up into the hype, will buy when the price is at an all-time high, and then be bitter about investing once the price drops back down. Instead of being emotionally invested, we need to be financially invested. And there is no better way to do that than with dollar cost averaging. When you regularly invest the same amount of money into the market, you eliminate a lot of the risk. You don't have to try and time the market to get the best price. Because let's be honest, none of us can really predict this wild crypto market. And even though you might not buy in at the lowest lows, you also likely won't buy in at the highest highs either. What you do by yourself is some peace of mind. Dollar cost average some money into crypto and thank yourself later. It's that simple. So what are the disadvantages? Well, there aren't many. However, if and when the crypto market takes off and the prices skyrocket, then of course it would be a more lucrative option to enter the market at the beginning of a bull run with a large sum of cash. Dollar cost averaging would have lower gains in this scenario. But again, how can any of us really time the crypto market? And since most of us don't have large sums of money at our immediate disposal, this isn't something that should necessarily deter us from this investment strategy. Here's a quick example of some bad timing, or some good timing, depending on how you look at it. Imagine that you had gotten into the Bitcoin game early on. If you had somehow managed to be around in, say, 2015, that's 7 years ago, which is forever in the crypto world. But let's say that 7 years ago, around this time, you bought $5,000 worth of Bitcoin. With the price of Bitcoin at around $275, you would have purchased about 18.38 Bitcoin. Well, now that 18.38 Bitcoin would obviously be a lot higher than 5 grand. Try about $700,000 higher. If you had opted for the DCA strategy with your $5,000, say maybe around $200 a month for the next 2 years, and then you just hodled, you would have still turned a profit, but a significantly smaller one, to the tune of hundreds of thousands of dollars smaller. I admit I'm cherry picking the data a bit to prove my point, but it is important to remember that this style of investing can put a ding on some of your gains. Perhaps it's also worth addressing that dollar cost averaging requires more frequent trading, which therefore can lead to more trading fees. With that said, dollar cost averaging is a long-term game, so these extra costs would be negligible compared to the future gains. If you're on the lookout for a place to start your dollar cost averaging investment strategy, there are many options out there for you. Some of the major crypto exchanges such as Coinbase and Binance offer an auto investment option. Other places like Cash App, Swan Bitcoin, and Strike currently offer a Bitcoin only auto buy. But once you purchase Bitcoin, you will have gotten yourself into the crypto ecosystem. From there, you can trade into other coins you find more promising if that's your thing. Your first step once you've decided which platform to use is to set up the amount of crypto that you're wanting to purchase. Usually they'll have a minimum and a maximum limit. After you select the amount, you'll decide on the frequency of the buy. Like, how often do you need your crypto thirst quenched? Monthly, weekly, daily, hourly? Yes, you can buy Bitcoin on Strike hourly. How cool is that? I think they're definitely onto something there. After you get those two parameters set, then voila! Congratulations, you now have entered the stress-free world of dollar cost averaging. Crypto assets are changing the world we live in. People are now incentivized to plan for their future more often than ever before. They know that with hard money, they can carry wealth into the future without losing value, and in many cases, even gaining value in the process. One of the best ways to accumulate more crypto is dollar cost averaging. It is like winning the lottery in slow motion. You pick an asset and then buy small chunks of it over a prolonged period of time. You no longer have to worry about knowing exactly when to buy or sell, and instead you get to focus on other important things. Slowly but surely, you build a secure future for yourself. You have the patience and the skills to weather any storm. It's those of us with discipline and long-term vision who will most likely secure their monetary future. The world is changing, and a slow and steady pace wins the race. Thanks everyone. I will see you all next time. Adios.